Hi, I'm Jagadishwari Sevaraja from BHCM BL MSU Shalam, and my ID number is 012021091582. Today I'm going to talk regarding 5 accounting concepts. Accounting concepts make up the backbone of the accounting principle. These are the set of basic rules, laws, regulations and assumptions which are kept in mind when entering transaction in accounts book. Experienced accountants keep the entire account rule in mind when preparing an accounts book. There are some commons to accountants in their work as the air is around us. These are concepts and assumption, and there is no evidence for this, but everyone in accounting believes that these concepts are self-evident. First concept is business entity concept. It is most basic of the accounting concept. The business entity concept assumes that business owners are completely separate entities from the business. It means that the business is a standalone entity. The accounting books are kept separated from the books of business owners. The books are kept from the point of view of the business. The owners are referred as creditors to the business. So when the owner puts the money into the business, it is seen as the owner extending a line to credit the business. Second, money measurement concept. The money measurement concept refers to the transaction recorded by a business only in terms of money. What it means is that for a business, an account book can record only those transactions which involve monetary transfers. Any transfer or transaction which do not involve any money transfer are not recorded into the accounts book. This means the many important transfers which do not include money are not noted in the accounts book of the business. This concept also required that a business also put a monetary value on its intangible assets such as brand name or intellectual property. Third, dual aspect concept. The dual aspect concept refers to the double entry bookkeeping method. It means which transaction must be noted twice, once on the debit side and secondly on the credit side. The dual aspect concept is very important because it helps us to balance the accounting book. When the transaction is noted two lines on the opposite side of the same balance sheet, it makes it incredibly easy to check whether the transaction recorded in the balance sheet are correct or wrong. It significantly reduces the chances of any financial mishaps happening. Fourth, cost concept. This concept allows us to value of an asset to be noted in the balance sheet at the price at which was purchased or cost price as opposed to current price of the asset. For example, machinery or equipment purchase would be noted at the purchase price rather than it is current price. Even the machinery is very old and it is not worth to purchase worth the purchase price. For this, depreciation is introduced to take into account a reduction in the price of an asset. And then accrual concept. The accrual concept allows for income and expenses to be stated in the same accounting period that was incurred in and not in the accounting period in which the income was obtained or expenses were paid. This is known as accrual concept. A lot of times suppliers are not paid exactly when they deliver the goods. The payment time can range from 1 week to 6 months. The accrual period allows the supplier to note the income from the delivery good at the time those goods were delivered and not at the time when the goods were paid for. The accrual concept allows the precise measurement of income and expenses. Thank you.